Good morning, traders. It's the 14th of February. Happy Valentine's Day to you all. I'm Joe from Signal Centre, all by myself today. Steve's away on business for a couple of days, so it will just be me, and I'll be going through the latest headlines and all the latest moves on the markets ahead of what's a very important day. We've got the US CPI data due out later on. Been pretty much the biggest market moving event around at the moment, so it will be hotly anticipated. And we'll get to that shortly. In terms of coverage from myself today, as it's only me, I will get through as many of the markets that I possibly can. If there are any specific requests on markets, please feel free to post them up in the streams, and I'll do my best to cover them. Otherwise, certainly on the currencies front, I'll probably just go through the majors and some of the major indices as well. Okay, so let's get on to the headlines first of all. Good morning, Mark. Thanks for your message. Okay, the Fed remains hawkish. Yesterday, the Federal Reserve Governor Bowman stated that the central bank was not seeing as much moderation in inflation as it would like, and that the labour market is still very strong. She added that there is a lot of data between now and the next Fed meeting, but she expects that the central bank would continue to increase rates. Risk appetite did recover yesterday, despite an element of caution ahead of the US inflation data. Risk appetite strengthened with gains in equities and underlying market positioning. The dollar as well lost ground due to the equities gaining yesterday. That undermined the defensive dollar demand, and the US currency lost ground despite caution ahead of the inflation data. The currency index failed to test 1 month highs and drifted lower. In terms of what's happening in the UK, the Bank of England's Haskel posted inflation warnings yesterday. Reported in comments on Monday, the Bank of England MPC member Haskel stated that the central bank should be really careful over the risk of high inflation becoming embedded in the economy, and that the data would need to be closely watched in the coming months to give high levels of uncertainty. The UK wages inflation has also accelerated. The UK labour market reported an unchanged employment rate and a larger monthly increase in employment. The increase in headline average earnings slowed to 5.9% from 6.5%, and that's below the consensus forecast of 6.2%. We've also seen some higher inflation numbers in Switzerland. The Swiss inflation rate increased to 3.3% for January from 2.8% previously, and this is also well above the consensus forecast of 2.9%. The data increased expectation of a hawkish Swiss National Bank stance. So on to today, we've got the latest US inflation data release. This will be very important for all asset classes, with potentially very volatile trading conditions today. Consensus expectations are for a decline in the headline rate to 6.2% from 6.5%, with the underlying rate retreating to 5.5% from 5.7%. Stronger than expected data today would reinforce concerns over the inflation outlook and increase pressure for a more restrictive Fed policy, while there will be notable relief if the data is weaker than expected. So the situation will be complicated by benchmark revisions and changes to component weightings for this release. So it really is a super important day ahead of us with regards to certainly inflation, and could be a very volatile session as well. So let's get on to talking about some markets, shall we? Let's start off with cryptocurrency. Let's start off with Bitcoin. As Steve noted in his reports yesterday, we do appear to have formed some sort of short-term top, some sort of rounding formation here on Bitcoin, which has seen a bit of a correction take shape. Doesn't appear to be anything to be overly concerned about at the moment. As we know, we've seen a pretty strong rally in recent weeks. Prices were moving sideways for a large period, but then really burst into life around mid-January before eventually topping out at around 24,262. So the pullback has found some support here at a previous swing high level. And we can see here this level here acted as resistance on a number of occasions before eventually breaking through on the 20th of January. So we've just seen a rounding off of price, a pullback to this level. If we take a look at yesterday's candle, this is a daily chart, we can see that prices did attempt to move below that support level at 21555, but it held above it to form what looks to be a bit of a hammer candle. So that is quite encouraging, I would suggest, for owners of cryptocurrency, and indicates that there is reasonable appetite for risk at the moment. But of course, that could all change today, given the fact that we've got these numbers due out later. Let's move on to commodities and take a look at a few of those to start with. So let's take a look at oil. So not an awful lot has changed here. Still trading in a bearish channel, as we can see here, highlighted by these yellow bands, and that really started back in June last year. Prices have been contained within that band ever since. There is a corrective phase undergoing at the moment, and we can see that there is actually a sequence of higher highs and higher lows that have formed within this corrective phase, but we still need to see a pretty decisive break through these resistance levels before we can get too excited about a major move higher in oil. So we've highlighted a couple of resistance levels that really need to be taken out. I think the main one for me probably is 89.26. We can see a number of touch points along here. And if we can get above that, then that should trigger fresh gains towards 97.96. In the short to medium term, but still a bit of work to do. Yesterday we posted a doji candle pretty much at the top end of that channel, so that indicates that it would appear that the bears are still in control here. It's a similar situation with crude, potentially some sort of rounded bottom taking shape here, but again, some major levels of resistance that need to be overcome. Around 82.70, we can see multiple touch points there. If we look at yesterday's price action, again, we tapped the upper end of that bearish channel before closing back within it. So still more work to be done here. Looking really for a takeout of 82.70 to 83.66 to potentially trigger further gains towards 92.66. While prices remain below these levels, then there is still the potential that we could drift sideways to lower in the short to medium term. Let's take a look at gold. So that is still in a corrective phase. We obviously saw prices move lower within this bearish channel for a significant period of time, beginning back in March last year, before eventually breaking out of this channel in November. That triggered a really healthy rally higher. We have come up just shy of a 78.6% fib level, but we can also see here that we have seen a break of the short-term uptrend, and that was triggered on the 2nd of February, and since then prices have been on a bit of a grind to the downside. In terms of where this corrective move could end, we can reference some fib levels to try and give us a bit of a clue there. Let's just get rid of some of these that are not relevant to focus on ones that are. So a pullback towards a 38.2% fib level of this move higher here comes in around 18.28. So potentially some support could be on offer around that level. Let's wait and see. Obviously, this CPI number today could have a pretty dramatic effect on this. Of course, this is inversely correlated to the US dollar. So the US dollar has of late shown a little bit of life, given that it's had a pretty steep move lower, and as a result that means that gold has sold off. Let's take a look at silver. Prices here were trapped within a pretty tight range for a period of time between kind of December to early February, before we then saw a pretty decisive break of that channel and prices have moved lower. The measured move of this range indicated that prices would fall to around 21.91, which they have now done. Yesterday we posted a candle that suggests that maybe we are finding some support around here, but we are on the back foot again today, down by 0.5% as things stand. A bit of divergence there between the gold and silver price. Silver down by 0.5%, gold up by 0.3%. Below this level, I've got some support on my chart at 21.44, and then below that at 21.24. You could argue that there is an inverse bottom here, inverse head and shoulders, the neckline of which, of course, at the moment is an upward sloping one. If we drag that across, we can see that we've just gone below that neckline. I tend to prefer the horizontal breaks of necklines, so 21.24 potentially an interesting area for prices to pull back to. If we get some interested buyers around those confluence of support levels, then that could be potentially an interesting market to look at on the long side. Okay, let's move on to some currencies. So it's a bit of a whistle-stop tour today because it's only me doing it. Mark, I will get to Euro US dollar in a moment, but first of all, I'm going to start off with the dollar index. So prices have been correcting lower really since we topped out in September last year. We've seen a sequence of lower highs and lower lows. We did find some support around here at 101.29, this previous swing low from back in May. We posted a piercing line candle. This was backed up with further gains, and now prices have been, well, elevated compared to where they've been of late. But they do seem to be stalling at around 103.96, where some resistance has formed. So we've got a short-term downtrend in place, and we've got a swing high that was posted on the 7th of February. So this is the key level, I think, that we need to take out. And if we can do that, then we should trigger potentially a move to the 38.2% fib level at 106.52. But if we take a look at price action today, what we can actually see is that there's a gap on the chart. So yesterday we posted a bit of a reversal. It wasn't quite an engulfing or a bearish outside candle, which are typically the sort of big reversals that we look for a bit of indication about where prices may head. But we can see here the difference between yesterday's close and the open means that we have formed a gap on the chart. So there is potential for that to be filled today. In fact, let's take a look at that on the intraday charts just to try and make a bit more sense of it. So we can see here, price is kind of topping around here, potential for a short-term double top maybe. So we've got one top here, one top here. The neckline of this, if it is to eventually work out to be a double top, would be down there at 102.64. So if we get down to these levels and break below them, then that could signify that we formed a short-term double top and lower prices may be seen. But back to this gap. So this was the last candle that was posted at 11 o'clock yesterday, and then we had the open at midnight. So as the market rolled over, we can see that the gap was created. Now the gap will be from the last close on the previous session. And as we can see, prices then open down here at 103.21. So we've got an 8-point gap or so on gold. Often gaps can be filled. So if you are an intraday trader and looking for opportunities today, maybe you'd be looking to set some orders to try and tag that gap to fill it and then potentially move lower, because typically when you see gaps you expect the price to continue moving within that direction. So maybe there's an opportunity there if you're brave enough ahead of CPI to look at a short trade in terms of where you place your stop. Totally up to you and your sort of appetite for risk or how confident you feel about it. But you know, if the gap is to work, you wouldn't expect there to be much drawdown beyond the level here of the gap. So we could maybe set something up along those lines, which represents some pretty decent risk reward, but of course highly speculative ahead of such a massive number. And if this is a double top formation or a range that's forming, this is kind of in the middle of the range. So it's a bit of a tough call, I think, at the moment on that. Okay, let's look at Euro US dollar. Let's go to the daily. So we know we're in corrective mode with this because we've seen a break of this short-term uptrend. We completed a bit of a top here, sort of making new highs on the 2nd of February, but then closed aggressively lower at the following session to break below this short-term uptrend. And since then, prices have been moving lower. We've got a 38.2% fib level at 104.60. So that would be where I'd be expecting ultimately prices to get to. We are looking, by the looks of things, to sell into rallies today. That's our preferred stance from our analysts today. And I kind of agree that may be the way I'd be thinking about it as well. But it is a huge day. So I'm not too sure, you know, what really to do with that. Maybe best left alone until after the number. Or if you are going to set orders on this market, you might want to set them at extreme levels, given that we are expected to see some pretty substantial volatility. So all in all, the bias for the time being is bearish, given that we've seen the break of this short-term uptrend, and therefore we are expecting a bit of a pullback. I'll get to these other markets. I'm also going to look at euro sterling and sterling yen. So we'll get to those in a bit, but just going to round up some more of the majors for now. So looking at cable here, like euro US dollar, we've seen a break of the short-term uptrend, which has triggered a bit of a corrective move. Prices appear to have bottomed out around 119.69. in a little bit of a grind higher at the moment. Potential for a double top to form here. In order to complete that, we'd need to see a break below 118.42. So it's only potential for the time being, but I've got it marked on the chart ready for if we do break below these levels, at which point I think prices could potentially move as low as 112.36. But of course, that's going to mean that we're going to need to see some strength in the dollar index. And if we're going to see strength in the dollar index today, that would suggest that we're going to see a higher print on the inflation number. So we'll have to wait and see what happens there. Let's take a look at dollar yen. So this is being propped up at the minute by weak yen. We're seeing speculation with regards to a new governor being put in charge, and is that going to mean a change in policies? At the moment, it looks as though yen is weakening as a result of these rumours and this news. Looking at dollar yen, we can see that prices were trading in a corrective channel, so this is weakness for the US dollar. We broke out of the channel and also formed a bit of a triangle pattern here, which we eventually broke out of, creating a gap on the chart, which has since been filled. The pullback has tested the reverse side of the triangle, and prices have moved to the upside. So this is looking pretty good indeed. And I believe we could see higher prices here towards 136.66 going on the technicals alone. So that looks pretty good at the moment. Let's take a look at Aussie versus the US dollar, just because these commodity currencies are typically an indication of traders wanting to take risk. If they're buying Aussie over the US dollar, it suggests that they're favouring a risk-on environment. So we can see here on Aussie US dollar that we rallied into some pretty significant resistance zones up here, a 61.8% fib level, and also a previous swing high from back here in August. Prices broke down below the short-term uptrend line and have remained below that ever since. We've seen a couple of attempts at trying to retake it, but ultimately they failed. Yesterday was a pretty positive day, an engulfing candle formed, but while below these levels, and I think even as high as up to 70.76, I'd potentially be looking for opportunities to sell this, targeting a move down to this 38.2% fib level at 67.80. Okay, so let's get on to these requests. I've also had another request coming for natural gas, which I'll get to in a minute. But while we're on the currencies, let's stick with those for now. So let's go to Euro Sterling. Looking at this on the daily chart. So this has been quite an interesting market. So it was trading within a range, a well-defined range for a fairly long period of time, really, starting back in October, before we've eventually broken out convincingly to the upside on this in early February. But the rally to the upside was fairly short-lived. We posted here a bearish engulfing candle on the 6th, Monday the 6th, and that's seen the prices then retreat. I've actually got a channel drawn on here, a bullish channel. As we can see, we've had multiple touch points at the lower end of this channel, so we do have a valid channel in place. And we're actually at that level right now, which would be considered the lower end of the channel at 88.30. So potentially this could provide some support in the short term. And maybe if you're of the view that prices are looking bullish here following the break of this range, then buying into this pullback today could be the preferred strategy. And at the moment, we're pretty much at the level where it's going to decide whether or not we're right or wrong. And that's typically where you want to get into these sort of trades. Bang on the support levels, as close to the point where you're either going to be wrong or right on these ideas. So ideally, if this is going to work as a long trade, you want to see a pretty swift reaction from this level that we're at right now. And if we can get that turnaround, maybe you want to see some sort of confirmation on the intraday charts. Let's see if there's anything there shaping up. Not really at the moment. If we look at, in fact, the price action over the last hour or couple of hours, we can see we posted a decent move to the upside, which was then rejected. We then saw a very large range at 7 o'clock due to the UK data that we had out on employment this morning. And now we're actually starting to see prices move lower. So we need these support levels to hold. If we get maybe some sort of swing failures around here at 88.23, what I mean by a swing failure is if price action actually moves down through this level, but actually closes above it, say on an hourly or a 4-hour chart, depending on the markets that you're, the time frames that you trade, then that could be maybe a sign that we are going to see a bit of a reversal. So swing failures are pretty good patterns to trade. Obviously, you've got to be right on the button and watching these markets to try and get on them, and also importantly wait for those closes, because doing it ahead of a close, anticipating it without actually seeing the close, can be a very risky approach. Okay, let's take a look at sterling yen. Another request coming for dollar Swiss, which I'll get to in a moment. Okay, so looking at the daily here on sterling yen, been pretty range bound for a while now. Upper end of the range coming in at 161.52, lower end of the range somewhere between 155.35 to kind of 156.30. So unable to make its mind up. Yesterday was a pretty bullish day, actually. We posted a bullish engulfing candle, engulfing all the previous day's losses that we saw last Friday. So that's pretty encouraging, but we do have pretty stiff resistance up here that we need to contend with at around 161.52. So it'd be interesting to see what, if any, sort of reaction we get there. Above that, we do have further resistance that we'll encounter at 163.06. So I'm a little bit undecided about where I feel this market's going to go, to be honest. It looks as though more range-bound price action is potentially likely. And obviously, we've got this underlying situation with the Japanese yen that means that there is, speculation in the market and potential for lots of volatility and things to change at short notice. So I'd be a bit careful with that market for now. A couple of other requests coming in. We've got sterling CAD, so we're on the sterling theme. Let's take a look at that. So I've been talking about this over the last couple of weeks, potentially forming a double top formation, highlighted here by these red arrows. So this would be the first top, this would be the second. Then we have a pretty clearly defined neckline at 161.02. So on Friday, we actually closed marginally below that support level, but then came bouncing back on Friday. Prices gapped to the upside and look to be holding this level for the time being. So I think my bias would still be for potentially a break of this. If we look at why we've got this blue line on here as well, we've got the highs that were posted in February last year down to these lows that were posted as a result of that budget in September. A 78.6% retracement of that entire down move came in at 166.46, which pretty much capped the upside, which has caused this kind of potential top formation to occur. More evidence required, I think, on this one before we can get too excited about further downside. So, while this support holds, potentially there are opportunities on the long side with this in the short term. Let's take a little look at the intradays and see if there's anything here that looks interesting. Just going to clean this chart up a little bit and start again. So here is the major support that we're talking about. 160.77 held. Prices held there nicely, and we've seen a pretty decent move to the upside. So at that point, you potentially could have looked at trading at the support zones for a corrective move higher. But all in all, yeah, it looks okay. But I think I'm still a bit worried about this potential double top formation, and therefore I'd be looking maybe for another retest of these support levels. Again, if we get a decent bounce, maybe a swing failure, then that could indicate that this support is indeed very strong, and maybe we'll see another bounce. But I'd be watching and waiting on that one for now. Okay, let's take a look at dollar Swiss. So this is trading within a bearish channel, and I was kind of looking for maybe a break to the upside following this setup here. So we saw a new low made actually on the 2nd of February, so a swing failure effectively, and we then saw a really impulsive move to the upside, and that was backed up by further gains on Monday the 6th, but it was unable to actually break out of this bearish channel. And we can see here that the sellers have stepped back in. We posted a bearish outside candle here on the 7th of February. And since then, prices have continued to move to the downside. So it looks as though it's set to remain within this bearish channel for the time being. Got some support on offer at around 91.39, so potentially an opportunity to buy there if you think that we are indeed forming some sort of bottom. That would indicate that we would see a higher low. So maybe if you were interested in speculating here and believe that we are going to see some dollar strength, buying somewhere close to 91.39 with a stop loss below the recent lows. Obviously, if we're going to target that resistance, the risk reward isn't great. It's only about 1.61 to 1. But if we are going to get a breakout of this resistance level at 92.90, then we can maybe start targeting a move towards a 38.2% fib level at 94.75. So at which point the risk reward looks a lot more favorable, around 3.5 to 1 on dollar Swiss. But again, we saw inflation rise in Switzerland unexpectedly, and we've got a massive inflation number today from the US. So it could be a pretty volatile session for this market. I'm going to flip back to natural gas just because there's been a request on that, and then I'll move on to the indices. Obviously, if there are any other requests, post them up, and I'll do my best to cover them. So natural gas, as we know, formed a massive top pattern. The measured move of this pattern was here at 2.854. We smashed through that with relative ease. We are now focusing on these kind of support levels down here, which is also an 88.6% fib level, not generally well used, but we can see that prices are hugging around this level, around $2.50. So I mean, it's highly speculative buying here. Clearly, the dominant trend is bearish. There is potentially some sort of ending wedge forming here on the daily chart. We'd need to see a decent break higher, I think, on that one before we get too excited. And I think any move to the upside is only likely to be a corrective one and may not yield the kind of results that you'd hope for. Obviously, I know why people are attracted to this market because it has had such a spectacular collapse. But typically, bottoms take a while to mature, as the same as tops do in markets. So, be a bit cautious of this. Look for some sort of rounding price action. Yes, we might see some sort of ending wedge or a triangle pattern indicate that we might see a bit of a corrective move to the upside, but it could only be short-lived. We do have this glaring gap on the chart as well at around 439, which may be in the minds of some traders who are thinking from the long side and looking to speculate. It's a bit too rich for me, I think, but I can understand why traders would want to speculate on this, but I think you need to see a little bit more evidence. At the very minimum, really, a breakout of this triangle is what I'd be looking for to confirm that maybe there is going to be some bullish short-term price action on natural gas. Okay, thank you very much for your request, guys. Hopefully my commentary there was useful for you. So let's take a look at some of these markets on the index front. So I'm going to start off with the German DAX. This is still at elevated levels. We've seen sort of a breakout of a triangle which happened back here, or a wedge back in November, and since then prices have been certainly on an upward trajectory. We've got 78.6% fib level, which comes in at around these levels here, 15,328. And prices remaining up at those kind of levels. I mean, that is a bit of a shooting star candle there we posted on Thursday last week, which may indicate a bit of toppiness maybe in the DAX, a bit of profit taking potentially, but prices are still now holding the reverse side of this 78.6% fib level, which is quite encouraging. So there does seem to be some short-term support around 15,270, and while that continues to hold, we may see prices continue to consolidate and potentially eventually push higher towards these highs that we posted back in January last year. So that'd be a complete recovery really of the downward move that we saw throughout 2022. If we do break below the 15,270 level, then we could see a pullback into this zone here that I've highlighted, where there are multiple supports. And I think that would be pretty much a welcome corrective move on this market, just to really consolidate some of these gains and establish some fresh buying interest a little bit lower down. Okay, let's take a look at Eurostoxx 50 as well. Similar kind of situation to the DAX, really. Looks as though it's formed a really impressive bottom pattern, which completed on the breakthrough resistance at 4,020. Prices remaining elevated. Still a little way to go before we get a complete recovery of the losses that we've posted throughout 2022. Highs up at 4,415. Kind of sat in a bit of no man's land at the minute. So again, potentially, I'd like to see a pullback towards these levels to get some new buyers on board, consolidate some of these gains that we've seen, and really kind of reinforce the fact that we do have a bottom in place. But if we look at yesterday's price action on an isolated basis, we can see that we posted an engulfing candle. The body of the candle engulfed all of the losses that we posted on Friday. So that's a pretty encouraging sign. So, we can't rule out making new highs, given that there seems to be an underlying bullishness in equity markets at the moment. But again, that could all change today with the CPI number. Okay, let's take a look at FTSE. That continues to make new highs. Obviously, there are different implications for the FTSE. It's a bit of a strange market in that a lot of the companies within the FTSE 100 index actually generate a substantial amount of revenue outside of the UK and generate that in US dollars. So that's kind of keeping these markets high. We've also got some, big energy companies which are a huge weighting on the index, the likes of BP and Royal Dutch Shell, which recently have announced bumper profits. That's keeping this market elevated too. So the previous all-time high at 7,903, we've got through that. We're trading above it. Yesterday was a really bullish day, closing at new highs. And we're looking to push on again today up by 0.12% as things stand. So we're into kind of blue sky territory here with the FTSE 100, levels that we've not seen previously. So it's a bit of a challenge, therefore, to find resistance levels, but there is a really large round number looming very close at 8,000. So that's a pretty significant and psychological level for the FTSE 100, and it's now within a hair's breadth of seeing that. So you would expect the market to challenge that at some point in the coming days, maybe even today. We're only 25 points away from that, so that could be all important. So let's keep an eye on that. Onto the US markets, let's take a look at NASDAQ. Quite an interesting day yesterday, quite positive. So prices broke through this resistance level at 12,092 back in late January to complete what could be a triple bottom pattern. This indicates that prices may eventually head higher towards 13,751. So that is also a previous swing high from back here in August. If we look at price action over the last couple of days, we've made new highs up to these levels, seen a bit of a pullback. Yesterday we posted a decent reversal candle, nice big green candle. So potentially looking for higher prices here to be seen. On a pullback, we're now expecting 12,090 to provide some support. So providing that does provide support, then that could provide a decent platform for further gains in the short term. S&P 500, of course, the broadest index in the US. We've seen a breakout of the downtrend. We saw that in late January. Prices then accelerated to the upside. Seen a bit of a pullback in recent sessions. Decent green candle yesterday, being backed up from the doji that we saw on Friday, or the hammer candle, in fact, that we saw on Friday. So a decent reversal on Friday, backed up with further gains yesterday. So we've got resistance up here at 4,325. That would be the next upside target to look for. On the downside, some support in these regions here between 3973 to 4016. So expecting buyers to re-emerge in this level. That would give us some confidence that potentially we are forming a bottom here on the US markets, and we can start looking for higher prices over the short to medium term. Okay, I'm not going to go into the Dow because I think the S&P and the NASDAQ pretty much cover most of what we want to look at. A couple of requests coming in. I have looked at gold already, Chris, so please check back to the start of the video for thoughts on that. Let's move on now to the gun to the head trade. So this is where Steve and I pick, Mohammed have just been through natural gas, so you may want to check back on that as well. So Steve and I pick trade ideas live on our stream. We've got a live account running. We've put £2,000 into that account at the start of this year. And we're trying to see if we can turn a profit between now and forever, as long as we keep doing these streams, basically. So we risk 1% of our capital on each of these trades. Each of the ideas that we come up with must have stops and targets. All the ideas are placed at market, and we expire these trade ideas at 9 p.m. UK time, unless, of course, the stops or the targets are hit in the process. So we can take a quick look at yesterday's ideas. I was trading sterling Oz, I believe. There was a head and shoulders top pattern that I'd identified on the daily. Let's just bring that up. So you can see I had a head and shoulders top pattern that I'd identified on the daily. It was looking for the intraday for a potential sell-off to occur. Bit choppy yesterday, so it started off quite nicely, moving lower, but eventually went on to hit my stop loss at around 3 o'clock yesterday afternoon UK time, and prices remained really around those levels for pretty much most of the session. So that didn't work out too nicely. That's the name of the game. That's what happens. Steve was looking at an inverse head and shoulders formation on the S&P on the intraday charts. He traded that the previous day as well. And I think he got stopped out. But if we look at yesterday's trade, we click the play button, we can see that it worked nicely in his favor. So actually reached the measured move target of that inverse head and shoulders and did it before the cutoff, but Steve's targets were actually a little bit higher. So he was only on side by 1.82 R at the close. Which of course, will take any win is of course welcome. If we take a look at the Awanda account, we can see that the balance at the moment is at 1984.85. So we are down by around £15 or so since we started doing this. And our win rates are sort of around our consistent average, which is around sort of 42%. So we're only a good couple of trades away from being back on side with this account, and then hopefully building on that over the future weeks and months. So what am I going to do today? Well, there's a couple of options for me. Obviously, we've got CPI today. Do I take that head on and look at something linked to the US dollar, or do I hide in some other assets which maybe will be less correlated to what we're expecting from the US CPI number. I think I in my sort of cursory glance prior to coming on the stream, I did find something, but I can't remember what it was now. So I'm just going to have a quick flick through some FX markets to see what was taking my fancy. So we've got that gap on dollar index, but that's not quite there at the moment. I think euro sterling could potentially be interesting, given that we've got this bullish channel on the daily chart, and I'm expecting really this support to hold at 88.23, and if it doesn't, then we could see a pretty sharp move lower. So not enough evidence for me at the moment to have a go at that right now, but maybe something to stalk over the coming hours on that chart. I think it was sterling New Zealand that I was looking at, and I will get that confirmation in a moment when I flick through the chart. It was actually, but things have changed a bit there. So this was the hourly chart that I was looking at. Looked to me as though there was a bit of a range forming and a potential swing failure on the cards, and that actually did occur. We can see here that candle between 7 and 8 o'clock. We posted a new high, but closed back within the range. So that for me would have been an opportunity to sell, but thankfully I didn't, because this is roaring to the upside again now. Seemingly some strength in sterling, which of course is not going to help this euro sterling case either. So maybe going to have to give up on that. I don't want to spend too much time on this, because the idea is that we've got a gun to our head and we're just going for it. But sterling yen was something that was brought up on the stream. Bit cautious on this because we've got these major resistance levels above at 61.52, which doesn't really give me enough of a target on the upside. Just what I'm seeing there on the hourly is potentially a flag formation, a bit of a breakout there of a flag. Obviously, we need to see that confirmed on the close, and we've got 23 minutes before that does, so things could change, and certainly seems to be a bit of volatility in sterling at the moment. What else have we got? Sterling, New Zealand, New Zealand dollar, Swiss franc, making some new lows there. So that could be a candidate. Let's have a look at how it's shaping up on the daily. Okay, it's speculative, but we can see here that the long-term trend is bearish. We can see that there's a range formation here that's taken shape between 60.33 to 58.02. Looks as though we are going to challenge the lower end of this range again, and if we do get a break, that could trigger some pretty nasty moves on the downside. A measured move of this range, if it does break, indicates maybe that prices could move down to 55.72 on the daily. If we take a look at how the daily is shaping up at the moment on the candles, potentially an engulfing candle formed. It is, of course, potential because we've got so much time left in the day. And ideally, you want to see that confirmed on a closing basis, which, of course, at the moment it isn't. But it is seemingly one of the worst performing pairs at the moment, that and New Zealand dollar, Japanese yen. So let's take a look at this, shall we? Not massively keen on it, but it does give me a bit of shelter from CPI because it's not going to be directly correlated, although I do think CPI could move a lot of markets today. Looks as though we've got some support here at 58.18, which is breaking down. So let's get a trade on here, shall we? Let's sell that at market with a stop loss. I'm going to go there, 21.5 points, 58.35. In terms of a target, I mean, if we do break down below this key level here, it could trigger some further losses. So let's maybe look at a 4-hour chart, see if there's something to reference. So there's some lows down there. So we've got a level there, or we've got the swing low there. Let's go with that, shall we? It's going to be a meteor risk reward trade, this one. So looking for potentially a 4.38 to 1 return on this, if indeed these losses do persist and we see further weakness here. So let's get a trade on. I'm probably going to be kicked out of this one if I try and trade it because it's not on a Wanda symbol. Right, let's get rid of these drawings because they're not relevant. Okay, so stop loss there, and my target was going to be these lows, not that one, that one. Let's get that level drawn on, down to there. Okay, 4.5 to 1. Let's get that sold. So selling at market, take profits, stop losses, of course, always very important. So my take profit is going to be at 57.25. My stop loss is going to be at 58.36. My risk is going to be equivalent of 1% of our capital. So £19.85 at risk. Risk reward around 4.5 to 1. Selling that now. That's on. Feels ultra speculative. Feels really scary given that we've got CPI today. But I've got a gun to my head. I've got to do something. And so I have. Right, let's get on to the main event today then. So CPI due out at 1:30 UK time. Just to reiterate here, the consensus expectations are for a decline in the headline rate to 6.2% from 6.5%, with the underlying rate retreating to 5.5% from 5.7%. Stronger than expected data would reinforce concerns over the inflation outlook. So if we get a number that comes in higher than 6.2, which is the expectation for today, that suggests that inflation is actually still an issue. We're not seeing this rapid decline that we're hoping to see in inflation. If that is the case, we are likely to see a dash to safe haven assets, of which dollar index is probably going to be the main beneficiary. If money starts flooding into the dollar index and we start to see prices pushing higher in the dollar index, it's going to have a knock-on impact on a number of other assets, particularly commodities, which of course are priced in US dollars. If dollar strengthens, commodities are going to weaken. So oil, gold, silver, etc. And also we're going to see money coming out of indices as well, I would have thought. So we're going to see maybe a sell-off in NASDAQ, S&P, Dow Jones, potentially some other global indices as well, because obviously this is a major economy and one that's well watched. So careful of this number today, 1:30 UK time. Of course, if the number comes in less than 6.2%, it suggests that the Fed's policies are working and we're starting to see inflation come down at an acceptable rate, at which point you'll probably see money move out of the dollar index. So dollar index to sink, anything linked to the US dollar going to start rising. So your euro US dollars, your sterling US dollars, your Aussie US dollars are all going to start rallying to the upside. And you're going to see equity markets follow as well, and potentially cryptocurrency. So really is a big day. Lots of volatility expected. The one thing I can just say is be careful, be aware of this number out later, use appropriate risk management, and yeah, respect your stops because they're there for a reason, to protect your balances. There'll always be another opportunity to trade. Yeah, maybe today's even one of those days you want to step back and just wait and see what happens. Okay, guys, been a bit of a bumper session today. Appreciate your patience, and yeah, best of luck to you all today, and I'll be back tomorrow morning. Have a great day, everybody. Goodbye.